Breaking tonight, Australia's mineral strategy just became the frontline in a global economic confrontation. Washington didn't negotiate, they mobilized. Tensions are escalating across the Indo-Pacific tonight. The United States proposed a critical minerals trade bloc with coordinated price floors, but instead of cautious diplomacy, Canberra committed immediately alongside 54 other nations. Everyone believed Australia would hedge between Beijing and Washington on minerals policy. Market analysts expected Canberra to prioritize Chinese trade relationships worth billions annually. Strategic forecasters assumed Australia would avoid choosing sides in the minerals war. They were all utterly incorrect. Washington, D.C., Wednesday. Standing before ministers from 55 nations, U.S. Vice President J.D. Vance made a statement that electrified Canberra. We want to eliminate that problem of people flooding into our markets with cheap critical minerals to undercut our domestic manufacturers. Translation: Washington just told Beijing that American dependence on Chinese mineral processing is over. And what happened next? The alliance that Australia joined reveals exactly why Canberra's mineral diplomacy is reshaping Indo-Pacific power dynamics while China's leverage faces its biggest challenge yet. Dear viewers, between Monday and Wednesday this week, something extraordinary happened in global mineral relationships. Beijing pushed too hard. Washington said no. And Australia's strategic and resource-rich Australia became the partner every allied nation started calling first. The chokehold that changed everything lets establish what's really at stake here. China doesn't just mine critical minerals. China processes them. And that distinction has become Beijing's most powerful geopolitical weapon. The numbers tell the story. China controls the processing of materials essential to semiconductors, electric vehicles, and advanced weapons systems. Lithium, rare earths, nickel, the building blocks of modern technology flow through Chinese facilities before reaching the rest of the world. And Beijing has weaponized that control. Last year, China curbed rare earth exports to American automakers and industrial manufacturers. Production lines in Europe and the US experienced delays and shutdowns. A China-generated glut of lithium simultaneously stalled expansion plans for American production facilities. This wasn't market dynamics. This was calculated geo-economic leverage. Beijing demonstrated it could strangle Western manufacturing whenever strategic interests demanded. U.S. Secretary of State Marco Rubio made the stakes explicit at Wednesday's gathering without naming China directly. These minerals are heavily concentrated in the hands of one country, he stated, adding that the situation had become a tool of leverage in geopolitics. For Australia, watching from the Indo-Pacific, this presented both threat and opportunity. Australia's strategic calculus here's what Canberra understood that others missed. Australia possesses what China controls: vast mineral deposits, including lithium, rare earths, and critical materials. But Australia also possesses what China cannot offer: political alignment with Washington, regulatory transparency, and democratic governance. When 55 countries gathered in Washington, including South Korea, India, Thailand, Japan, Germany, and the Democratic Republic of Congo, Australia wasn't there as a junior partner. Canberra arrived as a critical player whose mineral wealth and strategic positioning made the entire bloc viable. The U.S. announcement of Project Vault, a strategic minerals stockpile backed by $10 bilas in seed funding from the U.S. Export-Import Bank and $2 bilas in private investment, creates immediate demand for Australian resources. But it's the preferential trade bloc structure that transforms Australia's position. The price floor revolution, Vance's announcement, introduced a mechanism that could reshape global mineral markets: coordinated reference prices, operating as floors, maintained through adjustable tariffs. Listen carefully to what this means. For decades, Beijing has used price suppression as a competitive weapon. Chinese state-backed producers flood markets with below-cost minerals, undercutting competitors and preventing alternative suppliers from achieving profitability. Western mining projects that could diversify supply chains become economically unviable. The price floor system targets this exact strategy by guaranteeing minimum prices through coordinated trade rules among member nations. Washington aims to unlock private investment in mining and processing projects that previously couldn't compete with cheaper Chinese supply. For Australia, this represents a fundamental shift. Canberra's mineral projects suddenly operate in a protected market where Chinese price manipulation cannot destroy profitability. Australian lithium, Australian rare earths, Australian critical minerals become economically viable regardless of Beijing's market tactics. The market response was immediate. Shares of mineral companies fell on news of the trade bloc. MP Materials lost 2.8%, critical metals dropped 7.7%, Neocorp Developments declined 2.8%, and USA Rare Earth fell 6.6% in morning trading in New York. Why? Because guaranteed price floors mean reduced volatility and Chinese market manipulation becomes less effective. The wild price swings that previously benefited opportunistic traders face systematic constraints. The alliance structure Australia joined the US-EU-Japan Strategic Partnership announced Wednesday provides the institutional framework. The US and EU committed to concluding a memorandum of understanding on critical minerals within 30 days. That timeline reveals urgency. Australia's Interior Secretary Doug Burgum announced Tuesday that 11 more countries would be named to the Critical Minerals Trade Club this week, with 20 additional countries showing strong interest in joining the coalition. This isn't a bilateral deal. This is a multilateral alliance where Australia's mineral wealth makes Canberra indispensable. Every member nation seeking to reduce Chinese dependencies needs what Australia can provide: reliable, democratically governed mineral supplies from a stable Indo-Pacific partner. And here's what makes Australia's position truly strategic. Canberra isn't just supplying raw materials. Australia is developing processing capabilities, building refining infrastructure, and positioning itself as the democratic alternative to Chinese mineral dominance. Beijing's response and Australia's exposure. China's embassy in Washington responded to the minerals bloc with carefully calibrated language. China has long played an important and constructive role in keeping the global industrial and supply chains of critical minerals safe and stable, and is willing to continue to make active efforts in this regard. Translation: Beijing acknowledges the challenge but frames continued cooperation as beneficial. This measured response reveals Chinese concern about losing mineral leverage while avoiding escalatory rhetoric that might accelerate allied decoupling. But Australia cannot ignore the economic reality. Chinese trade relationships remain worth billions annually. Beijing has demonstrated willingness to impose economic coercion when strategic interests are threatened. Canberra's commitment to the minerals bloc creates exposure to Chinese retaliation. The calculation Australia made is this short-term Chinese economic pressure is manageable compared to long-term strategic alignment with the world's most powerful alliance structure, especially when that alliance guarantees market access and price floors for Australia's most valuable resources. The broader pattern emerges, dear viewers. This minerals bloc isn't isolated. This is the third major multilateral framework Australia has committed to in recent months alongside AUKUS submarine partnerships and enhanced defense cooperation across the Indo-Pacific. The pattern is identical. Washington proposes alliance architecture designed to counter Chinese influence. Canberra commits immediately, and Australia's strategic value increases with each commitment. Scott Kennedy, who leads the Chinese Business and Economics program at the Center for Strategic and International Studies in Washington, identified the core dynamic. I think this is a recognition by the United States that it must act in concert with others to reduce its vulnerability in areas where China has supply dominance. For Australia, acting in concert means accepting shared risk for shared benefit. The minerals bloc creates dependencies. Canberra becomes reliant on allied market access, while allies become reliant on Australian supply. But these are dependencies chosen strategically rather than imposed through economic coercion. What happens next? U.S. Trade Representative Jamison Greer was set to provide detailed specifications on the price floor mechanism to meeting participants Wednesday. Those details will determine profitability calculations for Australian mining projects worth billions in potential investment. President Trump is expected to visit China in April. Critical minerals will dominate that agenda. Trump's October agreement to trim tariffs on Chinese goods in exchange for Beijing's pledge to hold off on stricter rare earth export restrictions demonstrates Washington's recognition of current vulnerabilities. The minerals bloc aims to eliminate those vulnerabilities permanently. For Australia, the coming months will test whether Canberra's strategic bet pays off. Can the minerals bloc generate sufficient investment to build processing capacity that genuinely competes with Chinese infrastructure? Will price floors unlock private capital at scales necessary to diversify global supply chains? Can Australia withstand Chinese economic pressure while allied frameworks mature? The answers will determine whether this represents a genuine shift in global mineral power dynamics or merely another announcement that fails to challenge Beijing's structural advantages. The Australian position, but here's what Canberra understands that markets are missing. Australia didn't join this minerals bloc because Washington asked nicely. Australia joined because Canberra's strategic analysis concluded that Chinese mineral dominance represents an unacceptable long-term threat to Indo-Pacific stability and Australian sovereignty. Every time Beijing curbs rare earth exports, every time Chinese producers flood markets to undercut competitors, every time mineral leverage becomes geopolitical coercion, Australia faces a future where dependence on Chinese goodwill determines economic viability. The minerals bloc offers an alternative, imperfect, risky, requiring significant investment and exposing Australia to Chinese retaliation, but an alternative nonetheless. And for Canberra, that alternative is worth pursuing. This isn't just about one trade agreement. This is about the fundamental question of whether democracies can build economic relationships that don't depend on authoritarian supply chains. Australia's mineral wealth makes Canberra central to answering that question. The world that believed Australian hesitation was inevitable just discovered Canberra's resolve is non-negotiable, and the alliance that Australia joined, professional, strategic, and now mineral-backed, is exactly why Indo-Pacific power dynamics are shifting while Beijing's leverage faces systematic challenge. Watch what happens when resource wealth meets strategic commitment. Australia just showed you the future of democratic mineral diplomacy. The question is whether Washington and allied capitals can build the infrastructure necessary to make that future viable before Chinese patience runs out. Dear viewers, the minerals war isn't coming. The minerals war is here. And Australia just chose its side.